Hey traders, checking into the stock market today. Long story short, it was a slower morning. The bears had complete control, just grinding down in a downtrend on all time frames. We then had a news pop where somebody, spokesperson from Russia, said they're open to diplomacy. It was fairly short-lived. We didn't confirm a 5-minute uptrend at any point today on the S&P 500. And that was the guide to continue to be looking bearish. So I was just using the 15-minute time frame and scouting lower highs. And I didn't even take a trade until midday, but grabbed a 15-minute lower high, and then after the pop, ended up looking bearish on this pop. And again, we never confirmed a 5-minute uptrend. Big move, 5-minute stair step, 5-minute stair step down, tightening range. I guess you could say that was a 5-minute uptrend that confirmed by a couple pennies into the end of the day, but obviously no follow through. So overall, SPY does have a double bottom at the fear low. The only hope for the bulls here in the short term is holding 357.04 and changing the hourly trend to the bulls to have some bounce follow through. In the end, this week is going to be all about CPI Thursday, 8:30 a.m. And then Thursday and Friday, the financial sector is going to begin earnings season, and we're going to see reaction there. So if we're going to hold this low, we need an hourly trend change here. And we pretty much would need to see the bulls get over 362.37, ideally overnight for the higher open to give the bulls some space to work with. But if we break that support level tomorrow, it's just continued hourly downtrend. And again, at that point in time, we will be in a downtrend on the monthly, weekly, daily, hourly, 5-minute. So the bears have complete control at this point, and the bulls certainly need help from a catalyst, being a bullish CPI reaction. The bears have been getting all the help from the fundamental economic data and events here. Jobs numbers crushed this day. Literally, it's every bounce. I believe this was FOMC. This was, I forget which was which, but one of them was the FOMC. One of them was, I believe, CPI back then in September. Another one was, this most recent one was the jobs report. But all these daily lower highs are being squashed by the bearish reactions. So I have a bear lean until the bulls prove to me that I should be looking in the other direction. And that means I'm not going to nail the bottom, but I'm not attempting to nail the bottom, and I'm not expecting to. QQQ led the way down with another clear bear break and fresh fear lows, low of 2022. Next time we bounce on the daily, anything under 284.18 keeps the bears in control. A little bit of a bounce into the end of the day, but doesn't mean anything unless we see an hourly uptrend confirmed, and then we zoom out and we watch our daily resistances. The dollar, still watching for a lower high, anything under 114.78, but it's going to be up to CPI, in my opinion, as to whether we break to the higher high or whether we head back down towards the recent low. It's just a question of, do we set a daily lower high before the CPI numbers and form a tightening range, which would not be surprising because, again, especially with the holiday today where the bond market was closed, Canadian holiday, we don't have much time before CPI numbers come. So 2 more full trading days and that's it. But wouldn't be surprised for some tightening ranges to form pre-CPI. But I'm not going to be trading for that. I'm just scouting hourly lower highs and daily lower highs and 15-minute lower highs. Semiconductors, fresh fear lows. So following QQQ and leading the way down, NVDA got absolutely crushed today. So again, just weekly, daily, hourly downtrends. NVDA, big drop to fresh lows, broke 119, $5 of follow through. As far as previous support levels, they mean very little to me in this market environment. Just like when the market is dumping fast and hard, it's not, Tesla's finding support and it starts bouncing while the rest of the market is dropping. Everybody finds support when the broader market finds a bottom. And it's that way, but more of a slow grind kind of drop, not a free fall, fast drop. But it's the same mindset for me. Yes, we can go back and look at, targets and gap fills and support levels. But in my opinion, it's going to be the NASDAQ and the S&P 500 finding a bottom, confirming daily uptrends, shifting momentum. That's going to lead to individual names and sectors finding support, not their own previous price levels. So it just has much less impact for me. Healthcare, so it's still a couple key support levels here. We know the S&P 500 held support. The key for me this week, can healthcare keep holding 120.70? Can the financial sector keep holding 30.12? Can IWM keep holding 163.28? If the answer is yes, then we know the bears are not going to get much follow through from here. If the answer is no, and if all of these sectors break to fresh fear lows, things can get ugly. That's when the VIX can spike and see a weekly bull flag that's trying to form confirm. So the VIX has a resistance zone, or at least a zone where we consistently have pulled back this year, 35 to 39. It's attempting a weekly bull flag, but we would need all of our major sectors to break fear lows together if we're going to head up towards 36 to 39. So I'm watching those sectors very closely, because if the NASDAQ breaks and SPY breaks, but these other sectors don't, that same thing happened last week, and it led to a decent little 3-day bounce. Biotech sector, notable drop the last 2 days. 77.54 broke. So we're just looking down at 74.97, the recent low. Bears regaining momentum quickly. Cannabis selling off. So again, the cannabis news was pretty much worst case scenario in terms of timing, because the bears have been in absolute control of the broader market since then. MSOS daily consolidation underway. I am back to all cash in this sector, and fortunate enough to be at the computer to nail that spike. Took a bunch of profit, gave a little bit of it back trying to hold a swing position, but very quickly back to all cash, and now just scouting a daily higher low. And there's a lot of space for it to form, but we have given back half of this move. And so it's entirely possible that we trade within this range for a while, where we set a daily higher low compared to where we came from, and then maybe a lower high after, we could bounce 15% from here and still be looking for a daily lower high. So because we gave so much back, entirely possible we trade within this tightening range for a while. Canadian cannabis getting absolutely smashed. I've been watching it for 5 years. 5 years of this trend on CGC, and I have not seen the kind of bear control that we've seen the last 2 days. It's just been perfection. Look at the 15-minute. Each day you get a little short covering into the afternoon, but the morning is just a massacre. And we're looking back down at our fear lows of 234 and 213 as the only levels in play. And big money has chosen CGC to be their bear, because you look at their peers and it's still notable weakness, but, well, it's not the same weakness, but it is fairly comparable. Just Canadian cannabis selling off in a huge way. So back to patient for me, as far as the sector is concerned, but I'm much more interested in MSOS because of the relative strength. Uranium bulls need to be cautious. Today is a notable day for me on CCJ. Increase in volume for the bears, one of the most bearish days in the last couple of weeks, but most notably, weekly lower high is now set. And if we confirm a weekly downtrend by breaking 24.66, our monthly lower high is set, and we're then at risk of losing the monthly uptrend. Bulls will be hoping for just a tightening monthly range to keep the higher lows going, which have been going for a couple years at this point. But we are on the verge of this monthly lower high being set, which would make me a lot more patient in the uranium sector as a bull. Silver, pulling back notably, again giving back a lot of this move. It looks kind of like MSOS, the cannabis name. No relation, but, well, correlated, of course. But giving back half of this move, and it's looking like a bit of a fake breakout. Most notably, gold never changed the daily trend. Stair step up, stair step down. When you see significant moves and you do not change the trend, trust that move less. SPY did it on the news reaction. Patient bear just waiting for the 5-minute stair step to break has a nice win. No 5-minute trend change took place, so we give a lot of that move back. We did not establish support on the way up, which means we can drop a lot harder, which is what gold has done on the daily time frame the last few days. Miners a bit weaker as well. Still going to be keeping an eye out for a potential 2-day inverse head and shoulders on these miners, but again, it's got to be dollar weakness. I cannot have confidence as a bull in crypto, stocks, commodities if the dollar is holding weekly EMA 12. It has to be lost for any kind of sustained bull move in these sectors and markets. Oil. Looking like a temporary top is potentially being set. Lots of space for a daily higher low. 96.82 resistance. Monthly higher low finally set. Been watching for it for a while. Now I'm going to anticipate a monthly lower high is the most likely scenario due to the size of this range and the amount of volatility. I'm watching for a tightening range. If this monthly bounce is going to have follow through, we will need to see a weekly trend change to the bulls on oil. But we're not going to look for a weekly consolidation until we lose the daily uptrend, and we got a lot of space for a daily higher low to form. Energy sector has been performing well with oil, testing the recent high of 84.26. We failed, and we're starting daily consolidation, but obviously this sector looks way different than the vast majority of sectors over the last 2 weeks. So notable relative strength in the energy sector with oil strength. Natural gas still weak. Burden on bulls to hold 622 and break 710 if anything is going to shift. If not, the daily and weekly downtrend remains intact and the bulls don't prove a thing. So overall, a bear controlled day, a little bit of a bounce on news at the end of the day, trapping some short-term shorts, but we need dollar weakness. We need a bullish reaction to CPI numbers, and we need a bullish reaction to financial sector earnings if we're going to see momentum notably shift. In the absence of those things, we're going to look for bears to keep control and potentially hit fresh fear lows for everything. But in the end, it depends on CPI, and that means a fundamental gamble, so to speak. Because we know 8:30 a.m., we're going to see a ton of volatility in response to the CPI numbers. So you either need to have positions established, but keep in mind that your stop losses aren't going to protect you because the reaction is going to be taking place in extended hours. So futures traders will be protected by stop losses, but not if you're holding SPY or any other individual name. So just be aware and have that as part of your game plan. Me personally, I'm going to be all cash into that reaction and take it from there. But it's the bulls that need help, is the long story short. And bears are very comfortable still. Feel free to ask any questions. I appreciate you watching. Hope you had a good weekend. If you're Canadian, happy Thanksgiving. If you're not Canadian, happy Monday. And do good things.